Hello everyone, welcome to this episode of Market Pulse. I'm Ajit Mahuli, the founder and mentor at learnpriceactiontrading.com. Let's take a look at what markets have been doing and are likely to do in the coming weeks. We'll start with Nifty. Just so as expected and as mentioned in the last session, we are moving downwards with a downward bias, making lower lows. There's a lot of supply, so buying at this stage will only be based on confirmation. The best area of demand for Nifty on the monthly chart is still here. As mentioned in the last session, it's still going to be this. There is no other place where you can buy without a confirmation. That's a monthly demand zone. Still no supply zone created. Once we break this demand area, there will be supply created, but there are overhead supplies around 18,000 based on smaller time frames. But this is what the monthly chart is giving us information. There's enough room to fall if we move down. But again, smaller time frame demand zones might hold it and push it upwards. Remember, we have the Fed meet, and with all this banking financial crisis, need to be careful about your positions. If you are a new entrant into the market, avoid taking any positions in such a market. On the weekly chart, if we have this as the origin of the supply zone, which will be a cap for the index. That's a weekly supply zone. New supply zones created here. It's not going to be easy for Nifty to go beyond this supply zone. So if it moves up, it will encounter supply between about, let's say, around 17,500. These demands have been tested deeply, and even if they hold, it will just push it to the supply area. And there are many supply zones as we go above. The best demand zone that we have is, let's say, even if you're short and we break the 16,800 level, that could be your target for your shorts easily. That's a weekly demand zone. And then again, we have another level on top of each other. So let's say about 16,000 could be the area. This is again a move which is consistently showing us lower lows and lower highs. Until and unless you have some confirmation, there is no point in going long. You can trade on the long side only intraday. Swing shorts, if you are sitting in, you got to trail it and based on the reward to risk ratio, cover it. Now going to the daily chart. So this is the area where Nifty is holding up for the last 3 days. If you see, we did make a new low, but there is no follow-up buying and we are unable to move. Now, this could be a very tricky situation. If for us to move above, we'll have to first go beyond, let's say, 17,200 area. This is going to create a lot of problem. And if these demand zones, supply zones hold, then we could see that the first immediate target would be somewhere easily close to this area, about 16,500. And those who are in shorts from these areas would look to book their profits at about, let's say, 700, and then wait for confirmations or keep trailing your stop losses. Enough room for index to fall, but no new short positions unless we break 16,750. We are pretty low on the curve. We could expect a bounce. Market could surprise us by a rally. So hold on, make sure that you trail your stop loss for your short positions, and for long positions, we need to wait for some more confirmation. So this is the area which is now holding up the index. Now, unless and until we go beyond this 200, 225 area, I don't think Nifty is going to find it easy to move towards the upside. But if we go beyond this, then we could probably potentially even move up to 500 to 600 area where fresh shorts can be initiated because we'll be with the trend. And even these could be areas where we can take some confirmation shots. So that is what the scenario is on Nifty. We again gap down today, went made a new low, but again towards the second half we moved out. probably markets are just going to be range bound till the Fed outcome on Wednesday evening, which will reflect on our markets probably on Thursday morning. So there's not enough great demand here. So if this supply zone holds, we could move down easily all the way up to this fresh area of smaller time frame demand, which is 16,650. That's where you can expect a turning point based on confirmation, and then the target one would be this, target two would be this. Right now, longs won't have too much of reward to risk ratio, and shorts based on location will be a little bit tricky. So if you're not in any trade, you need to wait and watch, and if you are in trade, you need to put stop loss and trail it correctly. So, and volatility is increasing every day. So if you see volatility as expected is moving up and is likely to move further up. If we go beyond, let's say 18, 19 areas, we could easily test 20. That's when Nifty could come down all the way to 16,600 to 16,500 areas. And we can wait for some confirmation to go longs, because that's a weak supply, which is inversely correlated along with the Nifty index. Coming to Bank Nifty now. Now, banking stocks worldwide are the ones which have been hammered quite a bit. Our banking sector is no exception, but we are still unable to break and close below that 39,000 area on the monthly and weekly. So if you see, we have a picture of supply that has got created here, which is at about 41,700. That could be the cap on the monthly chart for Bank Nifty. I'm still not a fan of this demand zone. Next best demand zone that you could see where we could think about going longs on confirmation is going to be at about 33,000, but that's too far right now. Smaller time frames could give us some more opportunities to trade counter trend after a pretty oversold territory. But right now, Bank Nifty has some more room to move down. The weekly chart will tell us where we are headed towards. So the demand zone that is currently holding up Bank Nifty is starting at about 38,250, and that's the demand zone on the weekly chart, where it could probably come and even go deeper up to 38,000, because this has been tested multiple times. But if this holds, then we would again move back up all the way to 41,600 or 41,500. So that will open up a pretty good reward to risk ratio on the long side. So for going long, we'll have to wait for the prices to come down here. So if you see, rejections are coming in, but these were the areas which were holding up in Bank Nifty. We did breach that, though we are in this congestion area. With all the global turmoil, the fresh areas of demand zones are all in this area, about 34,400. And let's say this is going to be where we could expect a turn and a very good reward to risk ratio on the long side. Of course, here you would have, but those will be more of short-term income trades. All right, so the trend is down. It's making higher high, higher low. It needs to be seen how this week fares. If we go in deep here, you can close your shorts or trail them, because if this breaks, then there is big room for the index to fall. And if you get some confirmation, you can go long for a nice target about 41,300 based on the weekly chart. Coming to the daily, again, similar price pattern. Last 3 days, unable to go beyond 39,700. Every time it goes there, it's sold out, but it's not even breaking 39,000. It's holding those levels, resulting into long wicks, indecision, fighting between both bulls and the bears. On the daily chart, if you see, that's the area where it is more constantly coming down from around 40,000. So smaller time frame supplies with the holding are going to be there, which will provide resistance for price to move up. And these are the areas where you can look at new swing shorts. If, let's say, a Bank Nifty breaks up to the upside, that's the area where it could likely go to. If you want to go long based on confirmation in these areas, your target should be somewhere close to 40,700. So That is what could be your targets for the long side. And if it continues to go down, we could expect it to even come all the way to between 38,000 and 38,500. So pretty interesting situation, tremendous fight. Sellers are in control because we're making lower lows, the trend is down, momentum is towards the downside. But for the last 3 days, buyers are not giving up. So we'll have to wait and watch for who takes off, who takes the control. That's going to be the area which needs to break convincingly. And if we close below this area, about let's say 38,600 or 500, then we could expect a nice fall up to at least 38,000 and 37,500. Fresh longs will be here. These are all confirmation long areas. Looking at smaller time frame. So that's the area from where we are moving up. This is the area, and new areas of demand zone for Bank Nifty are at these areas. So that's where it could continue if it is not able to reach the supply zones on a smaller time frame. That's the area I expect Bank Nifty to come to, and where we can look at a confirmation long. Only confirmation long, because this is tested and the force from the upper side is pretty strong. That's the demand zone which is holding up. That's from where we had the gap on Bank Nifty. It has tested once, it came there again, but it is not able to breach this area of 39,000. So going into a long position with events around will be a risky proposition. If you still want to go long and take that risk, make sure that you have a hedge position, because if the result is a gap down, then you will have unlimited losses. Rather, you can just keep a stop loss below this prior low and go long somewhere close to, let's say, 39,200 and try to extract as many reward to risk as possible. Even intraday is good enough, because if you see it closes into supply and comes down. So that is going to be a critical area of supply for Bank Nifty to break off. If it breaks this off, we could see it moving easily towards 40,400 to 500, from where we can take some new swing shots. Right now, in a fight going on, because of volatility and news events, cautious approach is advised. We are low on the curve. We could still go low further based on news events. New short positions can be initiated only at about 4,500 and longs around 38,000 or based on confirmation here. So be careful, trade safe, and do not overexpose yourself in these uncertain conditions. So markets are very volatile, and volatility is expected to increase, which is going to cause wild swings in your trades. So if you're in any trade, make sure that you put your stop loss and your target appropriately, so that in those swings you could either get out of your trade, set up for a profit or a loss, and not miss out closing the trade. So a lot of supply, but Bank Nifty is the one which is holding up right now and holds a clue for where Nifty is likely to go. If Bank Nifty starts collapsing based on global news, you could see Nifty also falling pretty much. All right.